it's my pleasure to bring to the stage a VC who is somebody who's inspired me in my journey. My man Marlon Nichols from MaC VC. What's going on,
What's
Marlon?
up,
How you
man?
doing?
I'm good, brother. I'm good. How are you?
Good. I'm good, man. It's good to talk to you, man. It's been a minute.
It has. It has.
So, as I quickly mentioned, you are somebody who's inspired me in my journey. I met you, but back in 2012. It was a different point in your career. So, why don't you tell the audience a little bit about yourself and your career path and where you are today?
Yeah, I'll be quick on that front. Yeah,
Don't be too
my
humble
career
now.
was that.
I said, don't be too humble now. Let the people know who you are.
Yeah, man. Nah. So my career's been in. I guess you could break it into thirds, right? I right out of undergrad, and I did my undergrad at Northeastern University in Boston. I joined a seed stage enterprise software company called Frictionless Commerce, and basically spent 3 years with them. Part of my stint was to move to the UK and help the company to expand into the UK and Europe before we sold it to SAP. Then I decided I didn't want to be an operator. I didn't want to sit inside one entity for years at a time. So I swung to the other side and got into consulting. First, it was kind of management consulting, working with the Blackstone Group, post M&A integration stuff. Then it turned into pure play strategy consulting on media and entertainment. So work with companies like Warner Music and McGraw-Hill, helping them figure out how to navigate what was at the time the beginning of the proliferation of the internet, and how their businesses could benefit from that as opposed to the hurt they were feeling from like piracy or bookstores closing, things like that. After a while, I decided, consulting wasn't exactly the best fit either, and I needed something in the middle. And so for me, that was venture. So I set my sights on doing that. Went back to business school, chose Cornell, had the pleasure and privilege of being the CEO of the school's pre-seed venture fund for a year and a half of the 2 years that I was there, and that kind of set me up to work at Intel Capital. Became an investment director there, which is, I think I was there when we met. Yeah, we were definitely there. I was definitely there when we met. And you were going through, I think, UMI, the accelerator. Yep. So, yeah, spent 5 years there, became a Kaufman Fellow, helped to develop and launch the diversity fund there before leaving to start my first fund, which is called Cross Culture Ventures with Troy Carter. And we brought on partner Susie Rue and Danny Brown. Grew that entity, invested in 42 companies, saw a number of them with successful exits. That's 6 years old now, still going. And second act was merging Cross Culture with another firm, LA-based firm called M Ventures, which was Adrian Fenty, Michael Palank, and Charles D. King. And so that kind of combination of our teams created MaC Venture Capital, which is where we are today. We're managing 110 million out of this fund. We're already in 31 companies. I think our cost to fair value ratio right now is about 3x. And we literally just announced the fund in March. So that's my background.
Yeah, man, you've done some amazing things, and you went from the operation side to the consulting side to the venture side, right? So that's been a heck of a transition. So I know the title of today's conversation is how to spot the winners earlier than anybody else. But I want to also talk to you a little bit just about what it means to like build a venture firm, and like what does that look like before you even get to the point where you start picking the winners, right? And so I've heard the comment before that the most entrepreneurial thing a VC can do is raise a fund. You agree with that?
Yeah, I mean it is entrepreneurship, right? I mean we're creating something from nothing, right? We're essentially building a company from the ground up. The difference is, our company is an investment entity. But I guess that's no different than Goldman Sachs and Morgan Stanley when they first started, right? We
That's true.
consider those, large enterprises today. At one point, they were startups. I mean, the same could be said for entities like, Andreessen Horowitz. They're like 12 years old now. People forget that they were a startup at one point too. Yeah, many of the there are a lot of parallels for sure, and I think the best investors that you can to have on your cap table as a founder are those that actually had to go through, crawl through the mud under the barbed wire, all that stuff to to raise their fund, right? Because we understand very intimately what that means, like what it means to put your blood, sweat, and tears into something, all the sacrifices that come along with building towards your vision. All the frogs you got to kiss to find that prince or that princess, right? So yeah, I think it should be a rite of passage in venture.
I completely agree, man. Going through a fundraiser myself for my first fund, man, it's a thing. You and a bunch of others tried to warn me up front. It was going to be a process, but y'all were right. Y'all were very right. And so, knowing, like, having gone through that process and knowing what it's like, talk to me a little bit about, you had a corporate venture arm, you had this big, huge platform behind you, a lot of capital behind you. And so for you, what was that decision to be like, now I'm gonna go do this my way? Like, what was that like for you?
Yeah, at some point things changed, right? And I think this happened. Okay, so when I first joined Intel Capital, um, the deals that I would find those deals because I was a member of the machine and the brand Intel Capital. After a point, it became that the deals were coming to me because I'm me, and founders wanted to work with me. At the same time, I was um, I was I was in a constant tug of war, right? Because at a corporate VC, you have to invest with some strategic mandate in mind. And I was starting to come across founders that I really believed in, and who were building companies that I felt like um, should exist in the world. And I wasn't able to make those investments or be a part of those investments because of that strategic mandate. And so that was pulling on me. And then the other thing that happened is I became a Kaufman Fellow, and I was surrounded by a lot of smart investors, some that were just coming from entrepreneurship that are now building their own firms. And I was noticing that a lot of these folks that were out there doing the thing, they had been investing fewer years than I had, right? And some had better track records, some had lesser track records, and so I was like, what am I waiting for, right? Like, I had in my mind like, no, you can't go raise a fund until you've had like 5 multi-billion-dollar exits and you're on the Midas list, and you're doing all that stuff, and here I am, like, immersed in this community, and I'm watching people do it, and it just clicked. I just said, look, given the other two things that I said before, that was a struggle. I don't think I'm as happy as I could be, and I don't think I am giving the world all that I could possibly be giving to the world. And so that's when I made the decision. All right, I'm going to go for this and figure it out. And fortunately, with the fellows program, I was surrounded by a lot of people to help me think through it, and put the pieces in place to start to build.
I mentioned earlier you were one of the VCs who inspired me. You were one of the first Black men I ever met in venture. I think you were the second Black man I ever met in person who was in venture. The first one was David Hall, right? And that's only because I'm from Baltimore. He's in DC, right? And so I appreciate that answer so much because, when I started my journey, I was working for the investment arm of the state of Maryland. And the reason why I left last year to start my fund was for the exact same reasons. I was meeting entrepreneurs that I couldn't back due to our mandate. And I thought that was crazy. And yet at the same time, I had been writing checks for almost 4 years, and I was thinking to myself, like, I don't have enough track record. I'm not ready. And then I started seeing all these people getting into the market. I'm like, well, if they're doing it, I should be able to raise money too now. And so I definitely appreciate, and seeing folks like yourself and others do it definitely gave me, and I would say a whole like generation of next generation, black and brown VCs to see that we could do it, right? Because Marlon's everywhere. You go on LinkedIn, you go on Twitter, and you see Marlon and MaC Ventures everywhere, right? And there's something to that. And so I want to touch on something that is a hot topic right now. When you started Cross Culture and when you were working at Intel, you were up in the Valley. You up there in the Silicon Valley, San Francisco, Palo Alto. What made you want to move your firm down to LA? As we're here, for Plug in South LA, running this conference. What made you want to get down here?
Yeah, and LA is home now. So it was a big part of why I'm here to support Derek in this community. But yeah, man, when for the first 2 years of Cross Culture, I was my co-founder, Troy Carter, and Troy has significant roots here in LA. So we were a fund that was kind of split between the Bay Area and LA, just on the strength of that's where we both lived and worked. But in a partnership, you got to see each other, or at least in the old real world, you had to see each other in person. And so I found myself like once every other week, then it turned to once a week, spending time here, and it clicked, right? I'd lived in, I was born in Jamaica. I grew up there, grew up in New York. I went to school in Boston. I lived in London for a while. I lived in New York City for a while, and then the Bay Area. And so I've lived in some major cities. And what was awakened in me is the fact that I was missing that kind of hustle vibe that you find in New York and in London. And I wanted that back, and that was here in LA. Also, just the diversity, right? So, race is one, and ethnicity. That's really important. But also, just like diversity of thought, industry, right? Interest. I wanted to be in a community where, if I go out to a bar or a restaurant and I sit next to somebody and start to have a conversation, we don't have to talk about, tech or the latest hot startup, right? I can actually learn something about a different industry that could inspire me to want to, try to invest in companies that are building for that specific, area or whatever, or maybe it's just something I'm interested in and want to play in. And so I found there was these major holes in my life that I was just kind of, settling. I was settling essentially, and I didn't want to settle anymore. I wanted to live, be my full self in my work and, and in my community. And so that was a big part of it. The other thing was, there are tons of seed stage venture funds in the Bay Area. At the time, there weren't a ton of seed stage venture funds in LA. And so we had a real opportunity to brand ourselves as an LA-based seed stage fund. In addition to that, in the way that we view the world, who we are, and our approach to investing, it was just another way for us to really differentiate from the rest of the pool and really build a name and a brand for ourselves, an identity for ourselves. So that's why I moved.
Got it. That's amazing, and it feels kind of interesting because when you did it, you were going against the grain. I'm sure there were people like, "Why are you moving to LA? You're not going to be able to run a fund there." When we look at it today, everybody's trying to leave, right? Everybody's going to different places. Everybody's looking elsewhere. So definitely sounds like you were ahead of the curve on that one.
I literally I remember we have these like wine and dinner meetings in the Bay Area with, some black tech luminaries.
Right.
And one of them has been a casual mentor of mine for years, and he's known as like the godfather of tech, black tech. And I sat next to him and I was like, yeah, I think I'm going to make this move to LA. And he was like, it's the biggest mistake you'll ever make. And I was like, what? I think here's why I don't think so. Here are all these reasons. He's like, I think you should think about that. And I did. And you gotta, I guess a part of being creating any level of success. I think I've had some success. I don't think I'm successful yet. But in creating any level of success, you got to have conviction, and you've got to ride on those views of conviction. And this was one of them. I felt like the entrepreneurial community down here was growing. I felt like VC was not far behind. And I believe that the later stage funds would start to spend time here. And that's just what I was picking up on, on my trips. And so, if I don't do anything else, I'm always going to bet on me and my ideas. And so that was a part of what happened there.
You really sound like the entrepreneurs you back. Like, you sound like somebody going towards risk and looking to make change. I've started to see some synergies here between, the way you think and the type of companies you invest in. Would you say that that's fairly accurate?
Yeah. I mean, it's human nature to want to invest in, hire, spend time with people that resemble you in some way. And that's not necessarily like your skin color or your gender. It's your mantra, right? The way you view the world. I'm someone, I will run through those brick walls like they're glass, right? And I'm only going to back people that I believe are going to do the same, right? So, yeah.
Absolutely. That's awesome. And so, we talked a little bit about being entrepreneurial and starting a fund, but to get to a little bit of the nitty gritty, and not for you to give up too much of your secret sauce, but talk to us a little bit about how you came up with your thesis, right? A thesis around companies that affect culture, right?
Mm-hmm.
And why that was so intentional for you.
Mm-hmm. It's kind of it's been a journey actually, and it's evolved over time, right? When I was first building the thesis, I was also helping to architect the Intel Capital's $125 million diversity fund. And there are some things I learned, from launching and then investing in that out of that fund. And one of the biggest things was the additional hurdle that our entrepreneurs had to go through because they got capital from this diversity fund within this greater organization, even though they had to go through the exact same steps that every other entrepreneur had to go through. It's coming out the same pool of capital. It's just siloed for that, and all the same strategic mandates and everything. All that still applied, but we found that our companies were spending. You get a 30-minute meeting initially, right, with an investor, and they were spending 15 to 20 minutes just validating the fact that they were a real company and that it wasn't a charity-based investment, right, or donation. It was actually investment, not a donation. And so as I was building, I was like, look, man, there's a huge opportunity in kind of these diverse communities. There's so many unmet challenges, right? That if you add some technology to it, you think out of the box in terms of processes and procedures, you could make some real significant impact to a lot of people's lives. And that population spends a lot of money on stuff they don't need. Imagine if they're actually building stuff that they need, right? And also that demographic is super influential. They're first movers, first adopters in technology and consumer products. And a lot of the world, takes their cue from what this demographic does. And so I knew I wanted to invest in our people. I also knew that I didn't want to put that diversity tag on them. And so how do I do that? And the underlying theme of everything that I just said is around behavior and purchasing patterns. And what do humans do? They behave. They do things, right? And those things that they do are what we call popular culture, right? And so if I'm trying to figure out, if I get a crystal ball, right, and I could say, okay, what does the future look like? From an investor standpoint, what I want to know is where people are going to be spending their time, where people and businesses are going to be spending their time and their money. And I want to invest there, right? So that's where we came up with this thesis of cultural investing, which is basically tracking big swings in or big shifts in behavior and culture trends, right? Try to understand what we're seeing, what's happening early. Figure out which of those things actually have stay power. In other words, can become part of pop culture, and invest in the white spaces there. That's what we do.
I love it. And I hope for any of those aspiring VCs or aspiring fund managers in the audience, you heard what Marlon said about he started to build his thesis while he was working at another platform and doing other work. The advantage of being at a firm and already making investments and starting to build your thesis is you get to start to pick up on all the things that you like and don't like, all the things that work and don't work. When I was working for the state of Maryland, we started a pre-seed fund specifically for underrepresented founders. That is literally where the basis for the thesis of RareBreed comes from. I got to work and started making investments, and I got to see the things that worked and didn't work. I got to see, to Marlon's point, what happens with people when companies get that diversity tag. Like, even if it is a direct investment, you still got people who view it like, oh, they got it from that diversity thing. It's not this, like, no, these companies are working hard, doing the same thing, and getting to learn that along the way while on somebody else's dime was very helpful. He also mentioned earlier on going through Kaufman and being able to go through programs like that where you get to be around other investors. You get to learn some of the nitty gritty of it. And to take a pause right there, I want to ask you a question because, one, I get to say thank you to you again, but MaC Ventures sponsors a scholarship for a program called VC Unlocked, which is a program that 500 Startups runs in partnership with Stanford University. Why did you decide to do that? Why? I mean, it's almost like a light version or a very shortened, condensed version of some of the stuff the folks do at Kaufman. But why was that important for you to create that diversity scholarship? As somebody who was a recipient of that scholarship and got to go through that program, and that program was ultimately life-changing for me, right? Like the people I got to meet, the network I got to build. To this day, I have a WhatsApp group with the people from that class, and we still talk to each other every day. Like, that was 2 years ago, and like we still do this, right? And so, why was doing something like that important for you and the group at MaC?
Yeah. Well, first, shout out to 500 Startups. They were early investor in the first fund, and we spent a ton of time with them. And it was actually their idea, right? It wasn't my idea. I can't take credit for it. But when they brought it to me, it just made all the sense in the world, right? It's like, well, why wouldn't we support this? We need to see. I was very early and intentional about saying things like, if you can't see it, you can't dream it. Can't dream it, you can't, right? And which means that if we want more Black boys that were born in Jamaica and grew up in Mount Vernon, New York, to know that they can have a career in venture capital, or even know that venture capital exists, then there's got to be more of me, right? There got to be more of you, and the only way that you can create more is making sure that you're doing the things to develop that talent. And so when they brought it, it just made all the sense in the world. we'd be crazy not to participate. I mean, RareBreed might not exist today, and all the work that you're doing may not. Let me take that back. You would have found a way because you are who you are, who you are. But I think it gives you it makes the process a little bit easier for you, or I don't know if easier is even the right word. It's like you have more support. You have more of a net to help you get there. You got your village, so you're not running it alone. I just thought that was really important, and it was something that I felt like we need to be behind.
That's amazing, and I'm happy to say that the last two recipients of that scholarship are both in the process of raising funds right now. So, yeah, I appreciate you saying that. I probably would have found the way somehow, but it definitely helped. It was a huge help in the journey. So thank you. And so now to start to make a transition to talking about how you spot those winners so early. And as we do that, for anybody in the audience watching who has a question for Marlon, please put it in the Q&A. I will save 10 to 15 minutes at the end to go through some of your questions. But somebody who's looking for companies that are going towards different trends, and people and companies that are setting the next wave of what cultures are going to move towards. Talk to us a little bit about what does that mean to you to find a company before anybody else? Is it truly you're finding companies before anybody else? Is it that you just happen to have a belief that other people don't have? Are you plugged into communities where you get to see trends earlier than others? Like what is it for you that allows you to pick companies or pick the winners, those future unicorns better than everybody else?
Yeah, it's all of those things, right? So our partnership is pretty unique in the venture space because so just to go through and big up my partners real quick, right? You got Adrian Fenty, who was a mayor of a major city, Washington D.C., right? And then spent almost 5 years helping to build out the regulatory practice at Andreessen Horowitz. Adrian's played and he comes from a family of entrepreneurs in the DC area, so knows super well, knows government and regulation really well. Then you have Charles Kane, who was a mega Hollywood agent, turned entrepreneur and media mogul now, right? So that network and the folks that he entered, incredible. And then last but not least, Mike Palank, who was also WME, spent time with Will Smith, did some investing, and then also operated. So, and then you've heard my background. So it's just our networks are big, interesting, right? They span media and entertainment, professional sports, government, Fortune 500, who's who of the in terms of startups the last 20 years, right? We know and talk to a lot of people around the world, and what we try to identify are the parallels, the things that folks are saying around behavior in across many countries, right? So various countries in Europe, the U.S., Latin America, the Caribbean, right? What are things that the common threads that we're hearing as we're having conversations with our community? And then what we do, because we like to approach our investments with what you call a prepared mind, right? So then we take that thread. To core, a lot of research to figure out. Okay, well, what are the things that would provide tailwinds and headwinds for this trend to continue in the U.S., in the U.K., in Asia, etc., right? Europe, and once we get to a point where we're like, wow, this thing has a real path to continue to grow and be adopted in a big way. Then we start to look for the white spaces, right? Where what exists today, or what doesn't exist today that could further catapult this thing, and then we go search for those companies, right? So that's one way. The other way is people, right? So one of our investments just announced today that after launching their product in June of 2020, they're now at a $2 billion valuation. And that was a bet that was a pre-seed company. They were pre-launch. We actually did the deal in September of 2019. Because we had known them from I'd known them from a prior company that I invested in that didn't have the exact outcome that we wanted. But I knew what their character was. I knew how hard they were gonna work. I knew how smart they are, and I also knew the challenge that they were going after and trying to solve, and what how impactful a real a solid solution to that problem could be. And so you back them. So it's about the trend lines and it's about the people.
The trend lines and the people. That's dope. So you backed the founder who didn't work out the way you expected, and then backed them again before they even had the product. Some people might say that's a bit, that's real risky. That sounds a little almost crazy to some people, right? So what would you say to folks like that, right? Like you said, it was their character, and you knew how hard they were going to work, but your job is to return capital to your investors, right? So,
Mm-hmm.
so how did you see the pathway? Like clearly they got to $1 billion valuation in like less than 2 years. That's freaking crazy, right? But like, how did you see, like, even before they had the product, even knowing that they had a company that wasn't a big win for you? Like, how did, like, what made you be like, we have to do this? Like, because when you make an investment that early, there's no wavering, right? Like you gotta like have the full on conviction. And so how do you get to that conviction when you're that early?
Yeah. So to be clear, that they had a product, right? They were starting to build some code. So it wasn't just idea, right?
Fair enough.
A
Fair enough.
little bit more than that, but it was still very early. It's how you fail, right? Or how you miss the mark, not the fact that you actually missed the mark. So for them, I saw how creative they were. I saw how motivated and hard working they were on their first company, and some natural a natural disaster actually is what led them to having to sell the first company. And I watched them and I worked closely with them to navigate that, and I saw how what's the word? Like how committed they were not only to making sure that the business ended up in a good place, but to make sure that they created value for their investors in this process. And it's kind of a flat thing, and we got equity in another company, but it was the right thing. And then, I continued to stay in touch with them and build a relationship kind of throughout. And, they were learning, from the business that they were in about the customer base and, this head bumping thing that was going on, buyer and customer. And they came up with a really elegant solution for it. Or concept of a solution for it. And, again, just looking at trends, exchanges, there's like marketplace 2.0, right? Whereas marketplaces, it's, someone's selling a product, someone's buying it. Or exchanges, you're trading value, right? And we're seeing that that's picking up, right? SaaS has been growing as a sector for a long time, and there's some real struggles between SaaS providers and their customers, right? Startups have been there've been a rift between startups and their funding sources for a bit now, in terms of especially as you get into the later stage, in terms of dilution, value, what debt actually means, right? And so there were just all these things that pointed to, this could be a really big business, and if I'm going to back a team, that's going to build towards this that I would back to build virtually anything. They're going to make smart choices. They're going to learn from their mistakes quickly, and they're going to respect our partnership and make sure that they're going to look out for us, and we're going to do vice versa. So it was a really easy decision.
That's a dope story, and I know exactly what company you're talking about, because that founder is amazing.
Pipe, yeah.
Yeah, Pipe is amazing. That team is incredible, and what they've built is going to be something that helps the overall entrepreneurial ecosystem in ways that I don't think a lot of people even conceptually understand just yet. So super excited for what they're doing. But you mentioned something in there about relationship, right? You got to build this relationship with the founders. Like, how important is that for you when it comes to investing really early? Like, as an early stage investor, how important is it for you to be able to build a relationship with the founders you back?
Everything the founders at the early stage, right? The business often changes its shape and even sometimes function, as you're moving through the various phases, and who you're backing to drive to ride that horse is of the utmost importance. So the best thing that you can do is to really get to know who those founders are before you write that check, and continue to build a rapport with them as you go on. Really, in my opinion, it's really the only way forward.
So, knowing that relationships are the only way forward, this is going to be very specific to the times that we're in. How do you feel about the way the market's moving currently today? We're seeing deals happen faster than ever before. Companies are raising. It's almost like, it used to be you'd only see companies like raise a whole round in a day. It's like folks coming out of YC. Now I'm seeing folks in Ohio doing that, right? And so how does that dynamic inform the way the work that you do at MaC? Or are you just like, look, I'm just never going to do a round where it's like, I got to put money in and decide everything in a day. Like, I got to get to know you because that relationship is so important. Like, what is it for you?
Yeah, I've never done that, and I don't think I ever will. And in fact, if I get to a place where I'm consistently having to do that, then we're slipping in our approach, right? Because our entire approach is to get there early, to find these diamonds before anyone else realizes that brush off the dust, you got something shiny. So yeah, it's just not the way we work. Now we have had to get to conviction in like a week, right? That's kind of the world that we're in, for some companies, not for most, but for some. And then it's about, can we do, right? How frequently can we get on the phone? When I shoot you a text message, how long does it take you to respond? Send you an email, how long does it take you to respond? If I say, like, I want to jump on the phone, can we do that really quickly? How do you answer certain questions, right? Am I you're a transparent communicator? Are you, are you holding things back? Are you telling me the good along with the bad? And are you focusing more on the what could go wrong and how to mitigate that versus everything's going great? Who do I know work somewhere, even if it's four steps beyond, that knows you? What do they say about you? And so I still have to do all the same work. I just have to do it faster, right? And that just means way more touch point.
I think something that's interesting in what you just mentioned was you talked about all these things you look for in a company, especially if you have to get the conviction fairly sooner rather than later. But it sounded like you were talking about all the nuances that are part of the due diligence process that isn't part of the due diligence process, right? It's like the due diligence process is, yeah, you got the packet of all the things I want to see in your data room, but it's also all these other touch points. How important are those nuanced and soft touch points and other things that you pick up on in the due diligence process compared to just, what's in your data room?
Oh, super, super important. Like I'll always respect and gravitate to a founder that, if we're going through the data and we find like, I was in a board meeting yesterday, for instance, with Chris Bennett at Wonder School, and we're going through the board packet, and there was a legitimate error on one of the financial statements, and Jeff Jordan at Andreessen Horowitz pointed it out, and Chris looked at it and was like, "Oh, that's a mistake. We'll fix it." Right? Versus I've been in other situations, it's like, oh, they're trying to talk and reason around it. No, it's a fuck up. Let's just fix it. So like, you pick up on things like that as you're having, these conversations with the founder, talking about the competitive landscape, what's it going to take for you to be successful? Like, I know a BS answer when I hear one, and I know, an answer that's really grounded in thought, right? Like, they have been spending time thinking about this thing, right? Thinking about the key drivers for the business, what could go wrong. And if we make sure those things don't go wrong, where do we go from there? So it takes time. When I started at Untitled Capital, one of my key mentors there is Lisa Lambert, and who now runs venture investing and M&A at National Grid Systems. And she said it's going to take you like 5 years to develop your lens and to really be good at this. And I think she was right. I mean, at the time, I'm younger, I'm aggressive, I'm trying to move. Like, no, I'm ready now. I know what I'm doing now. But after it takes reps, right? Huge basketball fan. I used to play, and the more shots you put up, the more you can shoot from field, as opposed to having to actually like look at the rim. So it's the same thing I think is true with venture. Just you see things over and over again, and you learn from them, and you build your lens from that, and you just get better.
That's awesome. And, shout out to Chris Bennett and Wonder School, another longer term relationship, because I met Chris going through New Me. He went through the first class in 2011. You were in Intel and you were a mentor. And here you are years later back in his second company, which is incredible. But that just speaks to, and I talk to entrepreneurs about this all the time, is you never know where this journey takes you. And so this network that you build up, you never know when and how it's all going to shape out. So you want to really take the time to develop those relationships and stay in touch, right? It's not necessarily got to stay in touch every quarter, but every so often shoot out a message, reach out to those investors who turned you down. Let them know how things are going. Let them know the good and the bad. Because to your point, as an investor, I need to be able to trust that you're going to share not just the good, but the bad. Because you sharing the bad is probably more important. Because when you share the bad, I probably can help more. You just telling me everything's good, man, that's great. But when things are going bad, that's when I can pull out my phone and we can kind of work through some things and try to see if we can't get you some help. And so speaking about help, when you invest in these companies so early, there's a lot that they need help with very often. And so when you think about that at MaC, what does it look like for you to do what we call portfolio support, really helping those founders that you back?
Mm-hmm. Yeah, so at Cross Culture and at M Ventures, actually, we used to say the same thing. Like, we're not going to necessarily be the largest check on your cap table, but we're going to be the most impactful investors. And now we can actually say we can be the largest check on in your on your cap table, and we'll still be your most helpful investors. I talked about our backgrounds earlier, and they're all grounded in services industries. Like, we serve, and we bring that approach to venture capital. Like, we want to add value, and the way that we do that is threefold. We've all operated at some level, what that means. Helping to expand a company into another geography and ultimately selling it, running a major city, running a new wave and major media company, stepping in as CFO or CEO of a fledgling startup. Like, we've done that, right? So being able to sit across from, and credibly saying, hey, I've sat in the seat that you're sitting in right now. I've seen this thing firsthand. This is what worked. This is what didn't work. Decision is always going to be yours, right? But we have a perspective, or like a real lived perspective that we can share. So on operations and strategy and stuff like that, we can be very helpful. The other thing is, I talked about our varied networks earlier, right? Well, those networks are very deep. Like, we are connected at the highest levels within those organizations, and they take our calls and our emails and act on them. And we have, very real examples of, picking up the phone and sending emails, and those organizations becoming the largest partner for our, for one of our portfolio companies, or becomes an acquirer of that portfolio company. Like, we have those proof points. And then the last thing, and this is pretty unique to us also, is storytelling. The way that you show up in the world in the early days has an outsized impact on how large an organization you ultimately become and how quickly you get there. And, just given our backgrounds, we're very well equipped to help you tell your story in a meaningful way. So that's how we try to add value. For me, I'll at least once a month, I'm meeting with portfolio companies to talk about what's going on, how we can be helpful. I sit on a lot of the boards of our portfolio companies. I'm figuring out how we scale that now. Danny on our team is one of our investment partners. He's been shadowing me in a lot of these, and we'll start to take kind of the lead seat in some of those on some of those boards. But then also, like, everyone has my cell phone, and so you can message me whenever something happens, and we'll get on the phone and we'll try to figure it out, right when it's happening. And and I've had situations where it's been like personal things that come up that they just want to talk about too. Hey, this is happening with my co-founder, or this is happening with this aspect of the business, and I just really need perspective, or I need to get in touch with such and such. Like there's a plethora of use cases and examples where this happens. But it's just about being and open. And my approach is always listen, ask questions, and allow the entrepreneur to make the decision.
That's awesome. And so, for anybody out there who follows me on Twitter or seeing the stuff that I talk about being a value add VC, you can tell where I get a bunch of my topics from and my talking points from. You can see, the folks that I learned from, clearly like the same thing I preach. And, the thing that has helped me win deals is because we tell people, like, we're not your biggest check, but if you ever need anything, we'll be the first ones in line. And I promise you, we're probably going to work harder than all the other investors on your cap table, which has been true. That's only because I haven't been on any cap tables that I shared with MaC yet. So at some point, I have to duke that out with you for those titles. But you mentioned storytelling. And so we had somebody in the audience ask this question around, is personal branding important as a VC? Like, when you think about personal branding as somebody who has a very strong brand in the community, like, how important is personal branding for a VC?
I think it's a personal choice, honestly. There's certain certain firms where it's more about the firm branding, and there are other firms where it's about branding each of the partners, right? At the end of the day, you're getting, in some firms you are just getting the attention of that partner, and in other firms you're getting the entire team, right? And that's how we operate. You get our entire team. So yeah, I think it's a personal choice. But what is not a choice is that you, in this day and age, you do have to let the world know that you exist, either as an entity or as an individual, and how you can bring value, and you got to share your receipts, because that's just the world we live in now.
So that's interesting, and not to get too far off topic, but if you look at a firm like Thrive Capital, Thrive, a fairly well-known firm, done some really good investments, but they like their whole thing is like behind a veil of secrecy. Like, you don't really know who the folks are unless you know. You don't really like it's very intentional that they do like no branding, right? Would you say a firm like that could exist today with the way the world is?
Yeah, there's a lot of firms out there like that. But I think also it depends on how you're getting your deal flow, what type of companies you're investing in, um, those types of things. It would be, it also depends on how you built your sourcing network. Like, is it already in place before you get started? If it is, then yeah, maybe you don't need that, right? Because our best currency, honestly, is our entrepreneurs and the way they talk about us, right? And so, I mean, we could probably just ride off of that, right? Them just saying great things to other entrepreneurs. You find yourself looking at very interesting opportunities. So yeah, I think it is possible, but there are a lot of depends. Right?
There are a lot of depends in there. Okay, that's fair. We got another question from the audience, and I think this is a really good one. It says, "What advice do you have for someone getting ready to start their first year as a full-time VC at an associate level? What should they prioritize to ensure long-term success in the industry?"
Yeah. So when I made the decision, I was still consulting, that I wanted to pursue VC. I went and I talked to one of my mentors, and what he said to me was, "Well, you just got to be a VC before you actually are, right?" And so that meant, you got to get out and you got to meet entrepreneurs. You got to start adding value to those entrepreneurs. Build a brand or a reputation as someone that that can be helpful to those founders. So that's what I find out what's needed at your firm, do that, and then do more. But I think when you hire associates, depending on the firm, you're looking for probably one of two things, or if you can get both, then great. But you're either looking just like super connected, right? That's going to be out there meeting all the founders that we're not meeting. Operating in the spaces that we're not operating in, and introducing these net new opportunities to our firm. So that's one. The other is someone that really understands a space like super well, right? So all the players in fintech, where the white spaces are, what it's going to take for something to be successful, and you can help us analyze those types of companies. So I don't know what firm you're at, but you got to figure out what's needed and just start doing that. But I think the super connector play, regardless of anything else, if you're going to be successful in venture, like having that strong entrepreneurial network is it's a must-have in my opinion. So do that.
I completely agree with you. I would tell the individual, look, when they say your network is your net worth, this is a networking industry, right? This is an industry built on network. So having the network of entrepreneurs, having the network of other VCs who are going to send you deal flow, who you can send deal flow to, who can do follow-on investments, and then also having that network of operators, people who could be potential customers and partners for your founders, the ability for you to pick up the phone and make not a deal happen, but make a partnership happen or help handhold the company to a customer will carry you through. So that super connector piece, that network piece, truly, truly key. We had another question, and I found this, hit me with this from time to time. So I ask a slightly different way. What do you think about companies that are in stealth mode? Do you think having a company in stealth mode is a helpful thing, or do you, or would you invest in a company that's in stealth mode? Like, what do you think about that?
Yeah, we've invested in companies that were in stealth mode. And stealth means different things. Stealth could mean that they just haven't announced that to the world that they've existed, but they are closing pilot beta customers, doing stuff like that. Pipe actually, while their commercial launch was in June of 2020, the product became available to a small group of users in January of 2020. So yes, and it just depends on whether or not it's the right thing to do for that company. I don't know if it's a consumer facing company that makes much sense, because all of your metrics are going to be around user adoption, retention, if there's a transaction involved, AOV, and things like that. So not sure how that would help a consumer facing company, but I can see it working with deep tech companies and enterprise facing companies.
Got it. And so we only got 2 minutes left. So to end this off, I'm gonna cede the floor to you. Do you have any final remarks to the audience around venture as a whole, what it means to find those early stage companies, what it means to be an entrepreneur? Like, what is the last thing you want to make sure everybody from the audience walks away with understanding about MaC Ventures and yourself?
Well, I'll move it away from me and MaC Venture Capital. And what I'll say is, um, entrepreneurship to me is synonymous with value creation. And so the best thing that you as an entrepreneur can do is to create value, is to put points on the board. As you put points on the board, the reason for your existence becomes undeniable and things start to fall into place. So I know fundraising is hard. I've experienced it. But the points on the board helps. Like our fund was oversubscribed because we invested throughout the fundraising process. We picked some amazing companies that appreciated in value very quickly, and we made it really hard for investors to tell us no, or that we don't know, because we're proving it every day. So just create value, just build, control what you can control.
That's where we'll leave it. Well, Marlon, thank you so much for this time. It's a pleasure to get to moderate this with you. If you'd have asked me when I first met you, almost 11 years ago, if this would ever happen, I'd told you were crazy. So this is awesome to be able to have this conversation with you, and I hope the audience enjoyed it. And never forget, it's all about value creation. Whether you're an investor or an entrepreneur, the more value you're creating, the money will come, whether it's in terms of revenue or funding or whatever. You create value, everything else will work itself out.
So
thank you, man. I appreciate you.
Bro. Keep running.
Only way I know how to live. Trying to be like you. Well, thank you, Marlon. You have a good one. And thank you, everybody, for the session. We're going to get ready for our next two panels. So whether it's in one of the sessions or on stage, please find where you need to be, and we're going to hop to the next one. See everyone soon.